Good day, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this. Let me take a look here. I think it's the second Tuesday, the 2nd of November, 2021. Thank you for tuning in. Glad to have you guys here. Now, we got problems. Big problems. You know the Evergrande thing in China? And they've been saying that it's not going to escalate, or the dominoes are not going to fall. Well, the dominoes are going to fall, but they're just taking a little bit more time than you guys expected. Like Evergrande went down, and everybody thinks, hey, we got taught, this isn't going to happen. Well, it is. It looks to me like it is going to happen. We're going to get right in there in a second and take a look at this. But what will that do? Because there's other property developers in China who have projects, let's call them projects in the West, all like in London, Toronto, all these different major cities. And this whole thing, could erupt quite seriously and affect the West adversely, especially in our property markets over here. Now, what I've been noticing is things like Zillow, property sales and stuff, prices have been starting to drop from where they crested, and I see the front edge of a bubble starting to burst over here in the West in the property markets. Let's get right in there. Let's open up the charts right here. Okay, right here. Right. Oh, what's wrong with this thing? Okay, there they go. There goes the charts. Okay, so what we're going to take a look at is China property sector. It's starting to spill over right now into other cities, and it says China's property sector woes could spell trouble for prestigious mega projects in London, New York, Sydney, and other top cities as developers scramble for cash. It's starting to spread, and things like this take time. Like in 2008, when the crisis started to burst, it took actually a number of months before it became really manifest, where everybody could see what was happening. And so it says Evergrande Group struggles have dominated the crisis. The risk to multi-trillion-dollar property and global market stems from its rivals that have spent the last decade competing to build taller and ever-grander skyscrapers in places in the West, Let me see. There's a big Shanghai-based Greenland Holdings, which breaches as many of China's debt red lines as Evergrande, and it has just built in Sydney, Australia, I guess, the tallest residential tower, and it has plans to do the same in London. It has billions of dollars worth of projects in Brooklyn, Los Angeles, Paris, and Toronto. So it's starting to spill over. It's going to spill over into the Chinese property market. Now, we got peaked markets right now. All of the equity markets are peaked. The bond market is in a multi-year bubble, And, I'm going to tell you guys right up front, if interest rates start to go up, this economy, the world economy, can't take it. And what we got is the Fed printing unlimited amounts of these bonds. The Fed's buying 40% of them right now. They're talking about tapering? Forget it. Anyway, let's get in there and take a look. Well, I'm going to tell you how this will affect the markets, but let's get in there and take a look at silver prices today. Silver, we've seen it. It's been going down, actually. And today it's spiking down 57 cents. I can't begin to tell you guys. This is the buy of a lifetime right now. So what we're apt to see is real estate start to roll over around the world, and possibly a stock market correction, maybe quite a large correction coming up in the stock market, and a little bit of turmoil coming into the financial markets, and I could see them running into gold and silver as a safe haven asset. Bitcoin, the cryptocurrencies, they're not there yet. They're not really a safe haven asset. They're more of a speculative investment. And so we're seeing a smackdown in silver today. Let's take a look now at, okay, that's the Dow. There's the Dow, it's 35,928. Now I'll tell you about crypto. Crypto is up today. An awful lot of speculation into the crypto market. But when push comes to shove, I think that we could be heading for a little bit of turbulence coming up and a little bit of deflation. And when push comes to shove, I think they're going to run back to gold and silver. So we could see real estate prices roll over in some U.S. cities as much as 40%. Not really expecting 40% drop across the board, but kind of right now, due to the spillover from China, I'm kind of expecting maybe somewhere in the vicinity of, depending on what city you're in, some cities it won't go down much, but depending on what city you're in the United States, speaking about the United States property bubble, specifically in the Canadian property bubble, you could possibly see as much as maybe a 5 to 20% correction. And some cities might see as much as 40%, caused mostly by what's going on in China. China has 70% of all of their investments in the entire country locked up in real estate. So this is going to really impact China if this starts to burst. And it's actually the biggest property bubble in the world, what's going on in China right now. So I'm expecting some real turbulence here and some real changes in the financial system. And one is in respects to gold and silver, which has been crushed through this financial repression that's been going on. So the Dow Jones today is up 14 points. Super hyper bubble. We're looking at crude oil today dropping off 75 cents at 83.30. So now we're going to take a look at the MOVE index today, and the MOVE index is getting up too high for comfort. It's almost up to 80. I consider that once it crosses that 80 line, we're starting to get a little bit of an area of instability. Kind of like a pilot going down, flying through the sky, you know, he's telling the people on board. He says, get ready for a little bit of turbulence coming up just ahead, you know, and that's what I see coming now. We're entering into a period of financial turbulence. And it's not going to be an inflationary turbulence. It could be so bad that it could actually stem off some of this inflation we've been seeing. And I told you guys that this could happen between now and March of next year. And it looks like it's going to happen. We're going to get big question mark in my mind is how bad is it going to be. So, bonds and rates. Bonds today are down. We see yields falling. We're looking at a U.S. 10-year at 1.55. We've seen an inversion between the U.S. 20-year and the U.S. 30-year. Right now there's an inversion. So we're looking at a U.S. 20-year at 1.97. And we're looking at the U.S. 30-year at 1.96. So you're actually going to get more for putting your money in for 20 years than 30 years. I know, it doesn't make sense. But that's an inversion in the bond market, which is also a signal. Generally, when the bond market has an inversion like that, generally it's a signal that we're going to head toward another recession coming up when you get an inverted bond market. Let's take a look now at the U.S. dollar index and see what it's doing today. U.S. dollar index right now is at 94.05. So I'm not really expecting the dollar to go down a whole lot in its strength, being compared against these other currencies like the euro. But you have to understand that that we get a little bit of a deflationary period. It's going to help to support the dollar. I know we've seen some rather steady, strong, prolonged inflation, but and it's going to come back in a second wave that's going to be stronger than this wave, but only after we get through this little deflationary period, mostly being caused by China and the Chinese property market. I see that coming directly ahead, and it's going to cause turbulence, a lot of turbulence in the financial system, and it's going to cause. Well, see, we got two things going on at once. We got disruption in the supply line chains, plus we got this turbulence coming in from the Chinese property development market, which is going to be big. And one's deflationary and one's inflationary. And so I could see that the Fed becoming more accommodative once this deflationary little period hits. But it's going to strike fast, I think, when it happens. It's going to be a net positive for gold and silver. That's what I'm thinking. Basically, what I'm telling you guys is, do not let go of your gold and silver right now. In fact, if you're smart, you'll hang on and you'll get a little bit more put away while it's cheap. Cryptocurrency right now, be careful. Be very careful. And equities, be very careful about equities right now. I would say that the bond market might start to go up a little bit at first, and then it'll go down because they can't let it go up. The Fed will step in and they'll buy all they have to. Right now they're buying 40%. They might increase that. Listen, you guys have a great afternoon. And right now I'm trying to take in the information, process it, of what's really happening, because this is all just breaking. This is kind of breaking right now, and it's got to do with the property market in China. And it looks like this is going to develop into a storm. Thank you guys for listening. We'll catch you in the next show. Bye-bye.